what is the level of interest you're seeing from institutional investors when it comes to staking?
So we're the world's largest staking provider on an independent basis. And what we've seen over the last 6 or 7 years as proof of stake blockchains such as Ethereum and Solana have become more popular is that once an institution offers crypto to their customers, the next step is the staking always follows. So if you see a brokerage or an exchange or a traditional finance company go into crypto and make that available on their platform, the next step after they do that is to offer staking.
So in your opinion, what challenges do institutional investors face today when it comes to staking? What are they requiring? They have requirements.
Yeah, so
requirements?
At scale, staking is fairly difficult. Individually, each one of us could probably learn how to do it. Well, maybe you two could learn how to do it on your own. But at scale, if you have billions of dollars of Ethereum on your platform as a custodian or a brokerage, it becomes relatively difficult to do. So this is all we do. We focus on running that infrastructure. And so, for example, we run 4 to 5% of Ethereum's infrastructure goes through our computers essentially, and 7 or 8% of Solana runs through our infrastructure. So we've gotten very good at it. We were in the trials of it over the last seven years, and so it's a classical outsourcing argument.
You know, one thing I've been wondering, Lorien, is when we see obviously over the last year the rise of the ETFs, and now there's a lot of talks about having Ethereum ETF and of course a Solana ETF. Currently, staking yield is not included in those ETFs. So what do you think is needed for it to change? And is it an infrastructure problem or it's a regulatory problem?
It's primarily in the US, it's a regulatory problem. So this is an area where the rest of the world, the Middle East, Europe, Canada, have ETFs where staking is available. The US there's been a lot of regulatory uncertainty until the current administration. There's been lawsuits against Kraken and Coinbase, which have subsequently been dropped. And so one of our primary functions has been working with our clients and the SEC over the last 90 days. And I'm relatively confident that within the next 30 to 45 days, there'll be a clear set of guidance for US issuers on the ETF front.
And when you look at the infrastructure, to what extent are you seeing evolvement and advancement in the infrastructure for staking?
Yeah, it's become a much more complicated game. We have something known as a risk-adjusted staking rate of return. And essentially, there's a whole set of actions your provider can do that can either make it less safe or more safe and increase your rate of return. So we're very focused on that. It's not quite like high-frequency trading, but it's getting more and more complicated.
And that's interesting because obviously when you're taking protocol risk, but do you believe one day we'll see staking as the risk-free rate of crypto, where anybody who's trading, let's say if you're using Ethereum as collateral, that is the risk-free rate, is the staking rate that we have?
Yeah, it's great that you say that. We've been trying to say the same thing over the last 4 or 5 years, that essentially if you're anything more than a 5 or 6 day holder of a crypto assets that's proof of stake based, you just stake it. There's no counterparty risk. It's not like a lending. You don't give us your tokens. If we disappear, you just change your staking provider. So there's no counterparty risk, and it is essentially the safest thing you can do with your crypto. Now there's a risk curve, and you can do other things like lend it out, other trading activities, liquidity and provision, which has more risk. But staking is basically the 10-year treasury rate of staking.
So
of what you can do in the industry.
So if you look 5 years or 10 years from today, where do you see staking going? What kind of new trends do you expect?
Yeah, so we have a saying here that staking is getting weirder, and I think there's a bit of a barbell approach. So in fact, staking has been available on most of the popular blockchains over the last 5 or 6 years, except for Bitcoin, which runs on something called proof of work. And you're starting to see some extension of Bitcoin into staking this year. There's a number of protocols launching. I think we're still in the experimental stage. It's not an institutional product yet, but we'll see if staking actually moves over to and is available on Bitcoin also. It's not a natural compatibility, but we'll see. And in which case people could be using Bitcoin for more than digital gold and actually running smart contracts, et cetera. So that's kind of exciting.
What would be the challenge there? I mean, obviously, like you said, there's no staking right now.
Well, it is almost the antithesis of many Bitcoin holders. You don't do anything with your Bitcoin, you hold it. And so I think that in that community, I think leaving aside the technical difficulties and whether it's actually needed, I think there's a high amount of sort of emotional resistance to doing anything with your Bitcoin, even staking, because that's not what Bitcoin is about. It's about your Bitcoin, your keys, your crypto. It's a long-term asset. It's like digital gold. So you don't really want to do anything with it. So I think that's probably the biggest hurdle.
Yeah.
So, Lauren, let me ask you a more broader question. When you look at the crypto industry overall, now that Mr. Trump is in the White House,
he is. Yes, okay, right. Yes, I've heard that.
And investors are seeing this every single day. Right. The new regulations, whatever he's doing. So, in your opinion, what kind of new regulatory framework do we need in the crypto industry coming from the White House?
Right. So I used to have a saying on the regulatory front that the Americans will do the right thing, but only after they've tried everything else. So in this one area, I'll leave aside the rest of Trump's policies, which have their own controversy. But in this one area, the U.S. is, for the first time in my career, the U.S. has fallen behind on a new technology, primarily because of regulatory ineffectiveness. I would say it was almost an absence of a regulatory framework, which made it very difficult to operate in. So I think we've passed the try everything else, and the new SEC and the people involved there are interested to learn. They've been working with the industry and consumers, and so I think we'll have a useful framework very shortly in the next 3 to 6 months.
I think it's something a lot of people will be watching very, very closely over the next couple of months. So let's see. Well, thank you very much, Lorien, for joining us. That was Lorien Gabel, the co-founder and CEO of Figment, here in studio with us.
Are your children prepared for the future of money? Order Decoding Crypto with Henri and Hodler, the #1 new release kids book on Amazon.